So let's talk about those financial aid forms. We mentioned them a little bit when we talked about the process, but really there's three major types of financial aid forms you got to be aware of. The first is the FAFSA, which is the free application for federal student aid. I always mess that acronym up, so you're all seeing me struggle with it live. But it's the financial aid application that's administered by the federal government. Then you have the CSS profile, which is administered by the College Board, like the same folks that do the SAT or the AP exams. And then you have state and local government forms. These are variable. They really vary depending on from state to state, and they're usually only applicable for public universities within your home state. And then finally, you have what's called the iDoc, which is a document storage tool that's used by colleges for financial aid verification. This is where you're going to upload things like your W-2, potentially your tax returns, as well as supporting documentation for the valuation of your assets, investment accounts, etc. Sam gave a precursor to this question, but there are some things you should know in terms of which types of households tend to receive financial aid. As a general rule of thumb, this is not always applicable, but as a general rule of thumb, if your household income is more than $250K, or you have more than $1 million in available assets. Now, the word available there is very key, and we'll talk about what that means, available versus unavailable. You're actually unlikely to receive financial aid. So if you're above $250K household income or above $1 million in available assets, you're probably not going to get any financial aid, and I would focus on merit scholarships or cheaper sort of universities with in-state tuition if you're trying to save money on college. But at the same time, I do want to puncture the myth that affluent families, maybe not necessarily making more than $250K, but still affluent families, there's a myth that affluent families don't receive financial aid. The reality is that if you look at families with household income above $110,000 per year, those types of families are going to receive financial aid from 49% of public universities and 53% of private universities. The vast majority of, or at least a majority of families with household income above $110,000 actually do end up receiving financial aid. So that's the backdrop of how financial aid works and what it is. Now we're going to do a deep dive into the two main applications that you're going to be filling out as parents when you're applying for financial aid. And those are the FAFSA and the CSS profile. So what are the FAFSA and the CSS profile? The FAFSA and CSS profile are both financial aid applications that take in a bunch of information about yourself as parents, your students, your family situations, and your financial situations. Okay? The FAFSA is used to apply for federal financial aid at all institutions. And as a reminder, you really only tend to receive federal financial aid that isn't student loans if you're making under $65K a year in household income. And then institutional aid at most institutions that don't use the CSS profile. The CSS profile is much less common, but it is used for institutional aid only at roughly 300 private colleges. Again, they still use the FAFSA for federal financial aid. As a general rule of thumb, the EFC calculation in the FAFSA is more forgiving or more generous than the EFC calculation on the CSS profile. And we'll dive into the reasons. The first thing you should all be aware of is what the financial aid formula to calculate your EFC is. Now, what you see here is a oversimplification, but it is the basic formula that's being used by both the FAFSA and the CSS profile. As a general rule of thumb, the FAFSA and the CSS are both going to take 20% of your household's disposable income, and we'll talk about what disposable means in that sentence, 20% of students' financial assets, and 5% of available parent assets. So what that means is, in a given year, you're expected to pay about 20% of your household's disposable income, plus 5% of your available assets as a parent, plus 20% of the students of financial assets. All of that is together is your expected family contribution for a given year. Now, the differences between the FAFSA and the CSS are mainly in the treatment of divorced parents and which assets are considered available.